Resourceful Automobile's SME IPO has taken Dalal Street by storm. Despite being a relatively small-scale offering, it has captured significant attention from both investors and social media. The company, which operates just 2 Yamaha dealerships with a modest team of 8, initially sought to raise 12 crore rupees from the market. The response, however, has been nothing short of extraordinary, with bids totaling a staggering 4,700 crore rupees. The IPO has been oversubscribed by more than 400 times, with BSE data indicating 40.76 crore bids against just 10.24 lakh available shares. Retail investors alone drove a 496 times subscription, underscoring the unprecedented demand for the IPO. So what's behind this surge of interest in Resourceful Automobile? Established in 2018 and operating under the brand name Sawhney Automobile, the company sells and services Yamaha motorcycles and scooters from its 2 New Delhi showrooms. According to their draft red herring prospectus, the IPO proceeds are earmarked for expansion, including the opening of 2 additional showrooms in the Delhi-NCR region. Debt repayment and strengthening of working capital is also in the works. Joining us to decode the euphoria surrounding the Resourceful Automobile IPO is Mohit Gang, co-founder and CEO at Moneyfront. Mohit, thank you for joining us. What are you making of this overwhelming response that Resourceful Automobile IPO got? They were looking to raise about 12 crore rupees, got 4,700 crore in bids, and things just don't seem to be lining up. I mean, the company operates just 2 Yamaha dealerships, has a negative cash flow, just 8 employees on the payroll. What exactly are investors seeing value herein?
Suyash, I think on a lighter note, Resourceful has been extremely resourceful in terms of garnering good public opinion or good investor opinion for what has led to this kind of a frenzy. Honestly, I think these are all bull market babies. And time in and time out, again, we have seen these kind of frenzied IPO rush or madness, as you might call it, in bull markets. However, a caveat out here is that this is an SME IPO, Suyash. So this is not a main board IPO. Point number one, I think SME IPOs are not under the oversight of SEBI directly. They are regulated by the exchanges, and exchanges directly permit them on some basic checks. So from that perspective, look, the person who is wanting to raise the money is not at fault. Honestly, I think he's just perhaps it's a great way. Honestly, it's a smart move rather than raising debt in a market like this. Someone is wanting to dilute his own equity, whether it's 1 showroom, it's 10 showroom, that's immaterial out here. He has a business, and he's shown some profits last year. So I think around a crore kind of a profit. And if he raises this money, which he has raised, around 12 odd crores is the IPO size. 12 crores, his profit will double just by parking that money in a bank, right? So so he's delivered returns in the sense that he has doubled his profits just by raising this money. He's been a smart, investor or promoter in that sense, that he has not raised debt and he has gone to public and asked for whatever. And perhaps he might just open up 2-3 more dealerships, all you know. And from 8 employees, he might just go to 20-30 odd employees, or he might improve his tech automation. So I don't want to completely cast an aspersion or doubt the credibility of the promoters, because obviously I haven't met them, I don't know them, I haven't done basic checks on the business. For whatever I've known is by little reading on the social media and seeing the IPO size and other details around it, right? So I really don't want to cast an aspersion out here, but it is more a telling point on the investor community that they are wanting to lap up anything and everything which is dished out to them. These are definite red flags around the fraternity as on the whole, which thinks that making easy and quick money in the markets is a is a given, right? And honestly, such things don't end well, Suyash. They last till they last, but it's a game where the last man standing will really weep blood this time around. And I don't even want to hazard a guess when that last man standing will be left. But yeah, I think those things don't end well. But on the business side, honestly, I think the promoters has been right in their own self. It's about public who has gone and given a frenzied opinion on this kind of a thing.
Mohit, as you mentioned, the IPOs in the SME space itself are not approved by the regulator but the exchanges, which some may argue do not have the same level of stringent checks as SEBI. The regulator itself has warned of scams and manipulation in the SME space. So, for the benefit of our viewers, are some of these scams or To better put it, are chances of you getting scammed much higher here? And just to clarify, we are not talking specifically about resourceful automobile particularly here, but the SME space on the whole.
Look, I think even the exchanges must be doing basic checks. I'm not honestly aware about the checklist which an exchange follows when it goes about doing an SME listing, but I'm pretty sure it's not as stringent as the main board which SEBI does, right? However, once a company gets listed, it definitely comes under scrutiny. It definitely is in the eye of public. There are a lot of regulatory filings and disclosures which you have to make as a listed company. So all those things come as are added advantages or added checks for the investors. But it's very difficult, honestly, Suyash, in a country like India, to go deep down in the business, see what the promoter is doing. Is he utilizing the funds raised to the right manner? Is the purpose of raising the funds properly disclosed in the document? And are the funds being then utilized, right? For all you know, if the promoters increase their salaries and take out the money or siphon off the funds, showing some fake vendors or fake bills and invoices, I think these are all very common practices. And we have seen this happen in even larger listed names in the country. Leave aside SME IPO, the checks and balances are extremely small. So my only submission is, unless the investor is quite clear and is pretty sure about where he's getting, it's only then when one should get into this thing. If you're looking as SME IPOs for a quick buck, for a quick IPO turnaround, sell on listing, look, honestly, as long as the game lasts, I won't really blame anyone out here. That's the way the system has been built. Unless there is a minimum lock-in prescribed on SME IPOs, that okay, you will have at least a 1 month, 3 month, 6 month lock-in after listing. But I don't think those things are happening, or those things are on the even on the discussion board right now. So as I said, if the party is all about selling on listing and then taking out the gains, then yeah, all the best. It might last for some time more. But if the party is about you really wanting to find hidden jewels, companies which can become actually come into main board, get small from SME to small to mid, that kind of a transition, and looking for hidden gems, then you have to do deep dive research and really know what the business ethic, promoters, and the management is all about on those companies. And I think that's the only right way to go about investing.
Would you say that this unprecedented demand we are witnessing in the IPO space, especially in the SME segment, is from people looking to make a quick buck? Or does this confidence pivots on the belief that the company could grow from perhaps a medium to small and even a large cap company?
Definitely, definitely. That's the game which is going on, honestly. What defines otherwise the maddening FNO frenzy? What defines that the regulators are clamoring that too many of retail investors are getting drawn into it? My bigger concern, Suyash, is that a lot of student fraternity and the young age population is getting drawn into this thing, thinking this is a very quick, easy, short way of making money. And I go to few colleges to teach and take some courses, and I've seen people just wanting to do their own investing and not wanting to pick up a formal job. That to me is a very scary scenario, when one starts thinking that these things are better than getting into a formal organization and doing a formal job, right? So those are very scary signs. But every bull market ends with something which is extremely terrible. My sense is this has been one of the most phenomenal bull markets we have seen in our lifetimes, and perhaps the ending will be equally what do you say, catastrophic. I don't want to call that word, but yeah, seems like so. It might just not end very well for few people, so people have to be cautious. Quick buck is good till it lasts, but when it goes up, it also takes all your hard-earned money together. So my only word of caution is that.